Good evening, YouTubers. This is Jeremy from Bullish Bears, just kind of giving you a little update I put together on SPY. Kind of looking at a couple of things and also kind of explaining a tweet that I put out yesterday about diamond patterns. And I'm going to show you a little bit about how to trade them and what to expect from them. If you like what you're seeing and you like what we're doing, be sure and hit that like and subscribe button. Click on that little bell icon so you get a little awakening every time we come out with something, because we're going to keep coming with it. Anyway, let's kind of dive into this stuff. I said, on my tweet yesterday, I said pressure makes diamonds, and these diamonds aren't necessarily forever, but they do carry on quite a bit of price action after the fact. So let's see how they're formed, how they're shaped, and what they do, and how to trade them just real quick, and then I'll give you a little bit of inspiration as to what to expect tomorrow and the next day. So coming down this descending channel after that really big sell-off we had on, well, you all know what day that was. Anyway, came into a diamond formation in the middle of this nice long trend here. We've got range expansion and then range contraction. That is it for a diamond. All you do is draw some trend lines and extend them. You run them down and up, and whichever way they break out, because they don't always have a direction. This would be considered a diamond bottom. Some people would expect this to break out as a reversal. That's not the case. Almost never the case with a diamond. Unless it's a diamond top, then they're a little bit more frequently going to break down than out. Typically, you just apply that 60-40 rule. But with a diamond top, you'd go more like 70-30. So anyway, when this one tipped over, the quick thing they do, and they love to do this, and this is, it's got to be kind of a market maker move or something. They'll run up real quick, look like they're going to be, breaking out one way, and then they instantly about face and rip a face off. And it's pretty neat to watch. All you got to do is set up a center line on there as a pivot zone. And then after this formation is done, when it's getting ready to break, it'll come to a point. It'll give you a couple dojis. It'll give you a couple signs that something big's about to happen. And then you'll get a run. And you can certainly scalp this on a day trade. That little wick right there was, a little bit longer than you think. This is a 2-hour chart. But you can tell that this diamond broke down, went into another consolidation, broke down again, rode that channel, and then you can see all the extended lines kind of meant something later on, right? So we had angular resistance for this big diamond pattern here. And out of this, we got that nice sell-off on Friday. We had it bounce right off of that lower trend line from that previous diamond, methodically. And we came back up through the key pivot. That 359 pivot was critical. As you know, there was a rather large collar order set off down here, and that's what caused a lot of this sell-off. And boy, that was some quick action, because it did exactly what this one did in reverse. It broke out to the downside, faked everybody out, and then people who were caught going short in this as if it was going to continue melting down into this week, man, they had to cover that position real quick, man. That little fake out and then the breakout. And then we had a nice gap up in today's open to boot. So, this is exactly the volatility that you expect from a diamond pattern. And if you know how to look for them, you know how to find them, you'll know what to do with them. And you can wait for the trade to come to you and take action on the reversal, not the breakout, because the breakout almost always fake out. Anyway, on this diamond pattern, we also have a Wolfe wave, and that's just simply finding the bottom of a trend, and that was right about here. And you draw a line that pivots from there to the top of the fourth wave in the trend for the bullish side. So you count this as 1, 2, 3. I run those together because they were a double bottom, 4. And I didn't quite come to the top of that because I was actually riding price action on a smaller time frame to form this bullish Wolfe wave. And essentially, I like to color them purple and call them the purple wolf, just because, well, it's Tuesday. So anyway, same thing. You run your angular resistance on top of the diamond, angular support on the bottom of the diamond, and don't forget the upswing too. So you run your angular support this way, angular resistance that way. And we had the fake out, we had the breakout. Now we've had a nice gap, which is actually a nice measured move. If you look at it, it came from the bottom to here, consolidated, and made almost a mirror image of that move above it. We have an extension possible to the top of that Wolfe wave. That's why it's there. Today, the price targets pivot zones, and I didn't draw them yet, were at 378, 380, and 382 as an old friend of ours we know from way, way back. Those were the three key pivots for the day, and those are the three possibilities of today's close. So looking back, we did have this nice rising channel that also gave way to that, and I'll get into the shorter time frames and show you what those are about too. But at 382, I'm going to make that thing really stand out because it is significant, and I'm going to make it into a white wave. We'll look at that on a daily chart real quick. That is an important zone that we had to deal with when we were consolidating after the last crash channel. So it came down to it. It became critical support for this guy right here, and that was on the 19th. So 382 is an old friend, and it goes back even further. That was a resistance point at one point on this whole bullish trend that we traded the heck out of that too. Anyway, let's go into the nitty gritty 1 hour chart. Here we are. See that channel a little more defined here. We got our channel down from Friday. Pretty clean price action. You literally drew some lines on the chart and found your action. Narrowing down, 30-minute chart. This is where things get a little bit more technical, and then you get these little diamonds within the diamonds, and that's where you can set up even more price action to set your angular support and resistance line on. This little guy here on a 5-minute and a 1-minute chart. Nice little diamond, nice little channel. You can see price respected it very well until it didn't. But you look at this, angular support right on the close. Beautiful. So another diamond, another chart, or another channel opens up. This is a nice rising megaphone out of this one, basically measured move and all. We had this nice little downtrend break today. We knew about where we could expect that to bounce. 375 was the key. Look at that, nice big hammer. Perfect. Good stuff. Let's get down even closer. Go check out those diamonds. You can see them a little more defined now, right? On a shorter time frames, they will still tend to fake and break, but not always. They won't always have the same size to them when they do. So when you look at them on a 1-minute chart and you really get out and dig into them, I think I just dragged a pivot line. You can see that this one threatened to break right here on the 1-minute chart. You wouldn't see that on a 5-minute chart. Pretty clean channel. Price respected it very well. I had a nice reaction to it. And that's it. That's all you really do with these diamond patterns. You really just extend the lines on them and look at price, expect reversals, rejections, or what have you at those angular lines, and that's what it's all about. They become really easy to trade once you recognize them. And going back into I want to go to a 30-minute chart. Here we go. So we can see that this channel is another old friend we love to have. We get the descending channel. We get the attempts on resistance. When it does break, typically it makes about a 50% retracement. And if you look, that's about where, excluding the fake breakout, it's about where you'd see it, right between the two pivots here, 378, 375, in that zone. We knew we were destined to make at least that 50% retracement in that area. I don't get precise with those. I just go and close enough. All you have to do is be close enough for throwing a good trade together, and you can pretty much take collateral damage walking through these little 1-minute candles. But for the most part, if you're patient and you just let the price action speak to you, you'll know when to trade it. So essentially, we can kind of look at this as we've made the expected measured move, and we can extend up into this 382 pivot. We can also have a situation where we go and test this range tomorrow. So we're looking at between 375 and 378. And that rides right on top of our previous angular resistance. But overall, this market is still bearish. There's no actual long-term reversal pattern here yet. So we like to see a lot of these so-called relief rallies in this bearishness. And when we get them, we basically are doing what the market makers do. We want to sell the rip. there's no reversal actually present here. I mean, we can see the trend can extend just like it did back up here, and that's a very rough shaped diamond here, more or less. You can kind of see it did extend for a while, but man, when it when they started selling into that strength, dude, they overkilled it. So we can expect much of the same down here, and I'm willing to bet this market can kind of either extend to that 382 and visit that old friend again and make a reversal up there and get the third leg from the measured move. Realistically, it's like a two and a half leg measured move, if you want to call it that. But just from a technical analysis point of view, usually the chart's going to tell you what it's about to do pretty readily. So relief rally, window down. Relief rally, window down, really over and over and over again. I mean, it walks like a duck, talks like a duck. We got momentum kind of pegged out here. Watch that momentum. When that starts to give you the signs of weakness, you kind of get the idea what to do. In our group, we've been training our newer traders, our newer options traders, how to trade strangles. And this is exactly the kind of market where it's prudent to do so, especially if you're just learning how to trade. So it's a neutral position, and the idea is you hold it until you see the breakout, and then you sacrifice the loser, ride the winner on momentum, and profit when you feel like it. Pretty much when the chart tells you to get out of the trade, you get out of the trade. You walk away smiling, you put some money in the bank, and walk away into the next trade. So kind of a great, prudent way to trade in a bearish market and just be able to pretty much mitigate your risk as much as possible without missing out on the big moves. And in this volatility, we're going to get a lot of big moves until this starts to go and make that long, boring bullish trend again, like we had for many, many years straight here. So until that time, you can kind of trade what the chart gives you. If it gives you volatility, trade volatility, and strangles are great for that. All it has to do is move across one leg, be in the money, and ride for a while. Even if you end up failing to close the losing side of that trade, as long as your winning side is in the money, and if you set it up right at the right width for the price accommodation, that winning side will more than double the amount of gain that the losing side loses. So you'll still come out profitable even if you mess this up, as long as you get that move. So it's definitely a strategy to look into, and we teach it hands-on here with the Bullish Bears, and we give you all the goods on that. Anyway, I'm going to sign off, and hope you guys have a wonderful evening. We'll see you all in the morning. Keep an eye on those futures through the night, and it'll kind of give you a sign on to what to expect here. In fact, I'm kind of looking at them at the moment, and let's get that on 1 hour chart. I don't have it up on my screen here, but I'm just going to kind of look at it. It's starting to look like a bull flag going into the 9 o'clock hour here on the East Coast, but I don't know, man. I still like that 60-40 rule. It's bullish until it isn't, and it's kind of made a whole lot of big moves. So this can give us that pullback. You can probably, see about 37.25 pullback or 37.15 pullback, somewhere in that neighborhood. Or we could run to the bull side and go visit that 382 or, 38.20 on the open, maybe a little higher on the futures. We'll feel it out. It'll tell us what to do. Anyway, have a great night, everyone. We'll see you around.